my pleasure to welcome you all to the fourth installment of our Small Business Week in partnership with Invest in Hamilton. Uh, this is part of our overarching commitment to supporting our small business community. And as we see the ripple effects of the tariffs and the unjust trade war that we're all living day to day right now, it's important that we make sure that we're supporting all of our business community. And I know for us, this is step one of kind of a two, kind of 3 weeks of madness that culminates in Hamilton Day on October 31st to November 2nd. And it's a great program that generates over $8 million in economic impact for our community. Um, our friends that Invest in Hamilton do a ton for all levels of business in our community here. And that includes our friends at the Small Business Center. So when you think about the ecosystem of businesses in Hamilton and the source provided, the Small Business Center is a fantastic resource. So it's my pleasure to welcome Kristen Hugenboss to say a few words on behalf of the center and our friends at Economic Development, which is also Invest in Hamilton, which I always have to remember. I should say both because sometimes it confuses. Over to you, Kristen.
Thanks, Greg, and happy Small Business Week, everyone. My name is Kristen Hugenboss, and I work with the team for the City of Hamilton Business Center. So I hope there's some friends out there that we've met before and maybe some new businesses that we haven't had the chance to connect with. We're so pleased to partner with Greg and the Chamber of Commerce. Economic Development is a big supporter of small business, and we have a mantra here in Hamilton: small business is big business. And for our business center here, it's very important that we continue to partner and work together and navigate all of the challenges and all of the successes together with our partners in Hamilton. So very excited to be here and very thankful for this opportunity. If there's ever a way in which we can connect to support your success, whether it be through workshops or a consultation or one of our many financial incentive programs, please don't hesitate to reach out and connect. But excited to learn today and work with Adrianna to learn more about some of the great content that she's going to share today. Thanks for having us. Congratulations, Greg. And thanks for putting these great sessions on for our small business community.
Awesome. Thank you, Kristen. And you know what? I greatly appreciate all the work you guys are doing. And I know you've people who are close to my personal life. Your center has done a fantastic job of helping support and build their businesses, and that includes however great my hair looks on most days. So thank you very much. Or yeah, I'll only say great because Catherine would get mad at me if I didn't say that. I do apologize to the group. I have to step out for a lunch. So after my intros, I'm going to step away. But the great news is I'm going to be able to watch this session after because we're going to post them all up online. And so all of the great insights that Adrianna is going to give us and for this session on legal essentials, 5 tips for business success. So gang, it is my pleasure to introduce Adrianna Inneo. She is an associate at Ross McBride's Business Law Group, where she practices many areas of business law, including incorporations, reorganizations, commercial agreements, and leasing, purchase, and sales transactions, as well as financing transactions. Adrianna, you can do a lot more than I can already tell. Drawing from her diverse experience from assisting small businesses to advising large corporations and her deep roots in the Hamilton area, Adrianna brings a unique blend of expertise and local understanding to her advice. Outside of her legal work, Adrianna is also a regular contributor to the Legal Matters column in the Hamilton Spectator, and in 2022 joined the board of Food for Kids. So on that note, Adrianna, over to you, and thank you for joining us today.
Thanks, Greg. Thanks for the introduction, and thanks to the whole Hamilton Chamber for having me. As mentioned, my name is Adrianna. I am a business lawyer at Ross McBride here in Hamilton. I am going to start, before I forget, with sharing my screen so you can see the presentation. Hopefully that works for everyone. But as mentioned, I do work at Ross McBride here in Hamilton. I'm from the Hamilton area. I've spent the majority of my legal career here, so I hope to be helpful to Hamilton's businesses in any way that I can. I will be talking today, as is on the screen, about my top legal tips for businesses. So I hope that it is a very practical presentation for you To start with a little bit of an overview just of our firm, as mentioned, I'm at Ross McBride. We are Hamilton's oldest and largest law firm, a full-service law firm right downtown in Hamilton. We cover most areas of law, so obviously business law, real estate, commercial litigation, estates, employment, most things that are on the list there. We also have around 45 lawyers at the firm, ranging, of course, from senior to junior. So there's always someone at the level of expertise as well as at the price point that you're looking for. My practice personally is in the business law group. So as Greg mentioned, I assist with incorporations. Sorry if you can hear the ambulance. I am right downtown. But incorporations, reorganizations, purchase and sale transactions, so buying and selling of businesses, shareholders agreements and disputes, commercial leasing, sort of anything within the business law world. So to start with a bit of a disclaimer, it wouldn't be a legal presentation without one. This presentation is not legal advice or tax advice. It's some highlights based on things I've seen from my clients over the years, but the specifics of your personal situation can really change the nature of the advice that's given. So even in the Q&A, I'm sure we'll have time for that and lots of good questions, but if it's something a little bit more specific, we may have to chat about that at a later point. And in terms of a very quick agenda, so we'll go through, there's 5 main tips. We'll talk about each of them, and then we'll have some time for Q&A. I understand that there's ability for you to submit your questions. I would recommend that you do that as I'm presenting. We'll go through all of the tips, and then at the end we'll do Q&A. But it'll be easier if you've submitted your questions ahead of time. That way I can see them once we get to that point. Okay. So moving into my key legal tips. So I've been at Ross McBride for just over 7 years. 2 or so of those were during a global pandemic, which definitely presented unique and challenging circumstances for businesses. That really hasn't changed. There's always something new and challenging, especially in today's day and age, especially for small businesses. And so I'm going to highlight a few top tips based on things, as I mentioned, I've seen from my clients, things I've seen them do well, things I'm sure they wish they could do differently. I will also say, there's 5 tips. Not every tip might be for you. If you've already completed one, I hope that encourages you that you're on the right track. I will also say most do require a bit of an upfront investment, but hopefully we'll talk a little bit about why the benefits outweigh some of those early costs. So to go through them very quickly, we'll start with talking about incorporating your business. So the process and legal benefits of incorporating your business. 2, we'll talk about keeping your minute book or your corporate record book up to date. 3, we'll discuss ensuring your contracts are in writing and well drafted. 4, talk about your estate planning, so making sure that you have your estate planning, which is something that does seem personal, but it can have fairly serious ramifications for your business. And 5, we'll talk about making sure you find a great accountant who I always say is arguably more important than your lawyer. So to start, we'll talk about incorporation. So for those of you who don't know, I'm sure a lot of you do, incorporation is the process of creating a corporation or a separate legal entity to operate your business through. Now, there's numerous benefits to incorporating your business. It's a good step for almost every business. It's the most common type of business entity as opposed to a sole proprietorship or partnership. But to speak a little bit about the difference between specifically a sole proprietorship and an incorporated entity. For a sole proprietorship, you are your business. There's no separation between the two. And I know you probably say, of course I am. I do everything for my business. But legally, you are the same legal person as your business. So that means all income is personal income and all liabilities are personal liabilities. So with incorporation, as mentioned, it's the process of creating that separate corporation to operate your business through. You may be the sole shareholder or owner of that business. You may be the sole director or manager of the business, but you are not personally the same legal entity as the business itself. So practically, when you see this in public, you may see, Jane Doe Catering, which might be sole proprietorship, versus Jane Doe Catering Incorporated or Limited or Corporation. And that would, of course, indicate that that is an incorporated entity. And so the first main benefit, frankly, is limited liability. So when you're a separate legal person, it limits the personal liabilities of the individuals behind the corporation. So in a lot of situations, your personal assets are not subject to the liabilities of the corporation. So when you're starting a business, we get it. Not everyone wants to, take those upfront costs on incorporation, filing extra tax returns, things like that. But then when things go wrong, maybe default on a loan or rent, or don't pay a supplier, customer, or get sued by a customer, those are personal liabilities. And, that doesn't mean that we're using incorporation as a means of getting away with not paying our debts, but there are risks to all parties in commercial arrangements, and it does add a layer of personal protection for you. There's also certain insurance, in terms of liability, that it's only available to incorporated entities. You may also have multiple businesses, and you want to keep the assets of one separated from the liabilities of the other. And incorporation is a great means of doing that. So having more than one corporation to operate separate streams of income through. Now, there's some situations where that's not the case. So, where there's been gross negligence, or where you owe employee wages, or, if you've provided a personal guarantee. But in a lot of situations, it's a really helpful means of mitigating liability. The second main benefit, as mentioned on the screen, is for tax planning. So I'm not an accountant, thankfully. As mentioned, I do strongly recommend that you work with one if you're going to incorporate, ideally before you incorporate. But there are some tax planning strategies that can be implemented. Some of these have been, removed in the recent years, but in certain situations, income splitting can still be achieved. So if you have children or a spouse that's actively involved in the business, numerous people can be shareholders or owners of the business, and there's methods of splitting profit between the different individuals in a more tax advantageous way through dividends and things like that. So we can have a personal income tax benefit. Another one is that there's a lower corporate tax rate on corporate funds. So an example, if you leave excess funds in the corporation, you typically you pay a lower corporate tax rate on those funds. So an example I often give is one of my good friends who's a photographer, and we were chatting one day, and she was talking about how high her taxes were, which is obviously a great problem to have. But I chatted with her a little bit, and we figured she was making more than she needed to live. And however, every dollar that she was making, because she was a sole proprietorship, was considered to be personal income to her. So what we did was incorporate, and now she pulls out what she needs from the company, but the remainder is left in the company, and there's a much lower corporate tax rate on those funds. Obviously, get accounting advice on all of this, but it can be a great method that way. And also for succession planning. So we'll touch on this a little bit later, but it's typically much easier to pass on a business when it's been incorporated. So whether and there's tax benefits of that. So whether it's passing it on to family members, or even, certain exemptions for tax when selling to a third party, there's a lot of strategies there. And the third main benefit is credibility. So incorporation really shows that you've taken an extra step to legitimize your business to your customers and your clients, your suppliers, your insurance providers. It's easier to get, as I mentioned, certain type of insurance. Lenders, it's easier to get certain types of financing when you're incorporated, grants, things like that. So it's definitely something to keep in mind. So the timing, I'm going to give a timing recommendation for each of my tips. So for incorporation, you can obviously incorporate anytime. I will say it does get more complicated the longer you wait, just to split between what was done pre-incorporation and post. Your accountant can obviously help with that. Some do say, I can't utilize the tax benefits yet, so I'm going to hold off. But as mentioned, there's other benefits to doing it sooner rather than later. And lawyers can Of course, help with the incorporation process. There are methods of doing it online. I will say, I know it sounds self-interested, but when you incorporate online, you're missing the legal advice side of making sure you're setting up the corporation properly. We typically work with the accountants and make sure that we set the company up with a structure that makes sense for you. And a lot of the time, if it's done online and the book eventually comes to us for some reason, there's a lot that often has to be fixed, and it can be quite a bit more expensive, and sometimes frankly unfixable. More expensive than if we were to do it from the beginning. And the other thing that I always like to tell clients who are considering incorporating, and it's not ideal from our end, but when you do incorporate online, a lot of the times they do require that you release whatever company it is from any liability relating to what they do for you. However, lawyers, we carry liability insurance for that exact reason. If there's a concern with the way that we've set up your company, you'll have recourse for that. And so that's becoming a bit of a concern with the online platforms and leaving parties in situations that they may not have the ability to either fix or recover if they can't fix anything. Okay, so moving on to the second main tip. So we'll talk about the importance of having a minute book and making sure you keep it up to date. So you've got your articles of incorporation, which creates the company, and a lot of people stop there, especially when you've incorporated online. You get the articles from the ministry, but the next step is actually to create the minute book, organize the company properly, and then keep it up to date. So to start, we'll talk a little bit about what's traditionally supposed to be in the minute book or the corporate records book. So the articles of incorporation and any amendments, which as I mentioned is almost, you can think of it like the birth certificate for the company. It creates the company. Bylaws, which are standard set of operating rules for the company. Director and shareholder resolutions, so you can think of those as the meeting minutes. Registers showing who the directors, officers, and shareholders are. Share certificates, shareholders agreements if you have them, certain filings, so filings with the government or things like that. So why is it important to have a book and keep it up to date? So firstly, compliance with corporate statutes and law. So if you're a provincial corporation, the Ontario Business Corporations Act requires that all companies do have a minute book and that certain corporate matters are documented annually or that specific transactions are documented as they happen. So on a yearly basis, you should be proving your financial statements, appointing or reappointing your directors and officers and your accountants, declaring any relevant bonuses or dividends, things like that. And so it does serve as the annual resolution specifically, especially when you're working with a lawyer, serves as an annual check-in as well. There are certain corporate matters that when they happen, you do need to notify the ministry of those things, such as a change in address or director. And so if we're working with you on your annuals, we'll send you your annuals. You'll say, oh, that's not our address anymore, or that person's no longer a director. And then we can assist with updating the ministry of those changes. The second main reason is CRA audit. So obviously they can ask to see your minute book or at least certain documents, especially if you've declared dividends or if you've had certain share transfers, let's say on a tax-free or a tax-deferred basis. They may want to see records of that. Another big reason is corporate disputes. So if you end up in a dispute with a business partner, you don't want to be at the time of dispute trying to figure out how many shares everyone owns or whether this person was or was not a director. If none of that is documented in the minute book, it can be quite a bit harder to prove. So it's helpful to have the history accurately tracked through the life cycle of the company. And finally, corporate transactions. So, bank financings, purchase and sale of assets or shares, you will often be required to provide certain records like your articles, bylaws, registers, resolutions. And so it's helpful to have those obviously together. The timing on that one is ASAP and continuous. As mentioned, many clients do leave their minute books with their lawyer to assist with updating on a yearly basis. So we've got a minute book room here at the office that has, over 6,000 or so minute books that we assist clients with. Accountants usually let us know on a yearly basis what the status is, if there's any dividends that were declared, if it's business as usual. We would prepare the annual resolutions and send them out to the client to sign and put back in the book. If you don't keep it up to date, it's not impossible, but it can be much trickier and time consuming to bring it up to date at some time. So, we've had clients who've dropped off old books that haven't been touched in, 10, 15 years, and people may have passed away, or there's inconsistencies within the book, and all hope is not lost. We can do what we call omnibus resolutions to bring the book up to date at one time, but it's not perfectly immune to CRA audit or anything like that. It's not as ideal as being in compliance with the requirements over the history of the company. And when those things happen, like a CRA audit especially, we typically don't have a lot of time. We're working on a bit of a time crunch to make sure we can get them the records that they need ASAP. So it's just something to keep in mind there. Okay, so moving to the third main tip. So making sure you have contracts in writing and that they are well drafted. So looking on the screen, the handshake agreement, definitely a thing of the past, probably not good enough. But the more recent discussion, which is, the agreements that AI has drafted, also probably not good enough. We've seen, unfortunately, through what we do, whether it be leases, shareholders agreements, partnership agreements, customer and supplier contracts, they either don't exist or they're poorly drafted. And when things don't go well, obligations aren't clearly defined, decision-making mechanisms aren't clearly defined, and rights of the parties to the contracts are not clearly defined. And everyone obviously goes into a business relationship hoping it goes well. It's a little bit like a marriage. Everyone's getting along at the beginning. But then when issues happen, it's very helpful to make sure that you have arrangements in writing ahead of time. So an example I like to give, I had a client who was a commercial tenant. He had some legitimate trouble paying the rent. The landlord eventually tried to evict him and started raising a bunch of other supposed defaults under the lease. So we didn't assist with preparing the lease, but when we reviewed it, one section said that the landlord was responsible for paying property tax, and the other said the tenant was responsible for property tax. And so when the landlord came after our client to claim rent, they also used it as an opportunity to claim all of the property tax they had paid from the beginning of the lease term. And so now my client's legitimately behind in paying rent and also having to spend time and money fighting that he shouldn't also be responsible for paying property tax too. Another really important one is for business partners, so shareholders agreements, partnership agreements. It's great to make sure you contemplate future scenarios ahead of time. So again, it's kind of like that business prenup agreement. What happens if one party wants to leave? Who can they sell their shares to? When can they sell them? Do they have to offer them to you before they sell to somebody else? How do you value their shares? So is the opinion of an accountant sufficient? Is a qualified business evaluator more appropriate? How will you handle disputes? Or will you be required to inject cash into the company if it needs it? Are there certain decisions or expenses that require unanimous approval, or are there certain things you and your business partner can do without checking in with the other? And what this really does is it takes the emotion out of the difficult times. So you know what to expect and you know what's expected of you. It's really helpful to preserve the relationship and save time and money at the time of the dispute. And so the timing on this one, For shareholders agreements and partnership agreements, obviously it's ideal to do it at the beginning, but it's really never too late. Another example I love to give is a client. It's a corporation, but the business partners had been business partners for decades. And they just recently put a shareholders agreement into place because of family concerns. They know that the business is going to be passed on to their respective families, and they want to make sure that their families are going to agree to play by the same set of rules that they had played by throughout their entire business relationship. And with leases, again, obviously it's ideal if it's done well from the beginning, but lease renewals are a great time to reevaluate, so to renegotiate, to clarify any terms that have been of concern. If you're a tenant, you can say, I'm a great tenant, I would love to renew for another term, but let's clarify a few things before we move forward. And again, it's really that upfront investment. We as lawyers, as I mentioned, have unfortunately seen the good and the bad side of these types of commercial arrangements. We've seen so many types of agreements, the types of clauses, considerations. Can chat and make sure we have what's of particular concern to you captured appropriately in the agreement. And if you speak to my litigation colleagues, they will absolutely tell you that it is more expensive to deal with these issues when they go poorly than if the appropriate arrangements were in place from the beginning. So moving to number 4, which is estate planning, which is, as mentioned, something that seems personal, but it can have very serious ramifications for your business, especially for small businesses where you may be the sole officer, director, or shareholder of the business. So essentially the only one entitled to make business decisions. So one of the main thoughts is succession planning. So having a plan for what will happen to your business on your retirement or your passing. So whether that's sale, as mentioned, transfer to family, to an employee, wind up, whatever the case may be, there's legal and tax planning strategies that can be implemented. So if you think you're nearing that point in your business journey, it's important to speak with your professional team about that so they can help set you up in a way to pass that on in a very tax advantageous way and make sure you're covered legally as well. But speaking from a much more logistical perspective, do you have wills and a power of attorney? If you don't, you should. And if you do, but you haven't reviewed your estate plan since starting your business, you really should, because it ultimately comes down to who is legally entitled to make business decisions in your absence. So with wills, it's not uncommon for us to get a call, someone passed away, whether it's unexpectedly or not. If they are the sole officer and director of that company, who has the ability to act on behalf of the company? So something as simple as, signing checks for employees or dealing with insurance or whatever the case may be. If there's no will, it does make it significantly harder. So when a shareholder passes, logistically, the shares or the ownership of that company first moves to their estate before it gets distributed to beneficiaries. And so the estate or the estate trustee on behalf of the estate would normally appoint a director or officer in the deceased's absence. And that's typically themselves, or if there's someone else in the business who has the most familiarity with the business, then it may be a different individual. There's no will. There's no persons who are automatically entitled to be the estate trustees or the beneficiaries. You need to go through a much longer court probate process to make sure that those individuals can be properly appointed, which can halt decisions for some time. So, an example I like to give is a company that a client of ours, dad was sole everything. There was no will. There was numerous children who couldn't agree on who the estate trustee should be, and there was disputes about the beneficiaries, and they ended up in estate litigation and couldn't file for probate. No one was entitled to be director or officer. No one was appointed as it. No one was able to step up in their place without them being able to agree. And it left the company at a standstill for a serious amount of time, which can be very devastating to the legacy of the company, to the value that you're leaving behind, to employees, can open things up to liability with customers if things aren't happening that should be happening. So it's definitely something to keep in mind. Also, from a tax perspective, so I won't get into too much detail on it. Again, you can speak with your accountant as well as your estate planning professionals, but when you can actually have multiple wills. So if you have corporate assets or if you own shares in a company that might have significant value, you can actually exclude that asset, the value of that company, from estate administration tax as long as it is in a separate will. So something to keep in mind there. And then powers of attorney. So that would be more the situation of emergency, incapacity, you're out of the country and there's some sort of emergency back home. Who is entitled to make business decisions for you in your absence? So I'm not personally an estates planning professional. We have plenty at Ross McBride who are able to assist and who I regularly work with on matters that have the intersection between estate law and business law. And I can tell you that things do go far smoother when there is a will or power of attorney, depending on the situation, in place. The timing on that one, ASAP. I mean, you never know when you're going to need to use it. Hopefully not for a long time, but when you do need it, if you don't have it, it's obviously too late. So one of those things to keep in mind, especially when you are the sole person behind that company. And last, but certainly not least, making sure you're working with a good accountant. So as I mentioned, in my opinion, your accountant is arguably more important than your lawyer. I alluded to this throughout the incorporation slides, succession planning. There are obviously tax and financial consequences to running a business. So find a good accountant, work with them on a regular basis. We as lawyers are often implementing the arrangements that the accountants put in place based on the financial situation of the company. So whether it's a tax reorganization, an amalgamation of more than one entity, even something as simple as paying dividends on a yearly basis, we would often receive the instructions from the accountants based on their discussions with you, and then we help to document that. And even with matters that we take more of the lead, so purchase and sale transactions, buying and selling of businesses, we still need their input on appropriate structure, tax consequences, making sure the agreement deals with things like accounts receivable and how to adjust the purchase price based on various matters. They are very involved and a part of that, and we work together as a team. You and I don't know the Income Tax Act probably as well as they do. I'm sure not as well as they do. And so, if you're working with them regularly, they can hopefully make some good suggestions for you. Make sure you're staying on the right track and you're ready as certain things happen. So timing for this one, you can switch anytime, obviously, but I would say if you're not happy, switch early. Your accountant is really, as I mentioned, someone that you're probably checking in with more frequently than you're talking to us as lawyers. The number one way I will say to save money on your legal bill, as it shows on the screen, is for us to be able to work with an accountant who knows your history and who knows, the accounting side of things really well. If I'm starting a file, let's say it's a sale of a business and the accountant says, I really haven't tracked with this client in a long time, or if I'm having to spot accounting issues, or tax issues, then it's not an ideal situation to be in. Seek out referrals. There are so many in our chamber network that are wonderful. And speak to your other colleagues or your other professional advisors. I'm sure they can make recommendations for you. And yeah, there's not a ton to say on this one, but I very much cannot stress its importance enough. It is very, very important for you to have a good accountant by your side throughout your business journey. So on that note, we will move into Q&A. which that's my contact info, which I am hoping I can see those questions. There we go.
Adrianna can help you here if you're struggling. I see 2 in the Q&A box. Can you see those on your end?
I can see those 2 now.
Perfect.
So first of all, we did do our minute book updates every 2 to 3 years. So yeah, the 2 to 3 years, I mean, that's not uncommon. It's very much, when we say you're doing them every year, it's not uncommon for our clients to get a year or 2 behind. That's very reasonable. If there haven't been major changes in the company, probably less of a concern. You are supposed to, the party line is you're supposed to do them on a yearly basis. That's what the act requires. But things happen. And we often have it where, for whatever reason, a client doesn't reach out or their accountant doesn't reach out and they prefer to do things every couple of years. For sure, it happens. And we can catch them up pretty quickly and easily in that scenario. I don't think you want to let it get much more than that. Again, the concern is there's inconsistencies or someone is no longer involved and annuals weren't brought up to date before they left. You just want to avoid situations like that. So the second question, if we have contracts drawn up that cover off specifics of our type of business, can Ross McBride offer anything to improve those contracts, or would Ross McBride be ideal to do the original and have the specialist lawyer add in verbiage for the... So it's a bit of a case-by-case scenario. So, I mean, we often have it where we are the first one to draw a contract. And, how I would normally do an intake meeting with a client, I'm not a specialist in every specific type of industry that there is, but after having a quick conversation with the client, we can figure out what we need to cover from the agreement. So, a lot of the times, using my friend who's a photographer, something else I did for her, she wanted a contract drawn up for her clients, obviously. And the way that I would typically do an intake is I have a call with the client and I say, okay, this is the type of agreement we're working at. We discuss the general types of clauses that I would include and what I would recommend. And then I would tell them to do almost like a wish list of the 10 most important 10. There's no magic. It doesn't have to be 10. It can be more, it can be less, but that's a rough guide I give my clients to say, what are the 10 most important things for your business that you think need to be in there? And then they'll let me know that, and I can capture it properly in the agreement in legal language. So another one that is a good example, I have a client that's a interior custom cabinetry company. And one of the main things they wanted to include in their contract was that they had the opportunity to have a photographer come in and shoot the project once it was fully completed, because they wanted the ability to use that on their social media, because that's their main form of marketing. So they had the client at the beginning sign off on something to say, we're not guaranteeing we're going to shoot the house, but if we want a photographer to come in and shoot the house, you will work with us on that. So there's things that are specific to what you do that then we can make sure are captured in the agreement. And then we would often draft a first draft, send it over to the client. They take a look at it, maybe have another meeting. We make tweaks here and there. And then the contract, I always say too, should just be a living agreement. So I may do a contract for you. I may not hear from you for 3 years. And then you may call me and say, look, this one provision, it's raising a lot of issues. The clients don't like it, or we don't do this anymore, or circumstances have changed. Can you revise these few provisions to reflect our current arrangements? And we can update that as things happen. So that's If we're doing it from scratch, that would be the typical process. Now, that being said, sometimes clients come to us and say, this is the form of agreement that we've been using for years, and we don't want to reinvent the wheel, but can you take a look at it and make a couple recommendations? And so we'll go through, really make sure things like liability is properly addressed. That's probably the big one. And all of that, and clean up anything that we don't like from a legal perspective. So there's no right way or wrong way to do it. We can really jump in at any stage.